we've got a really interesting. Got it. Sorry, we just got to take that off the screen. We've got a really interesting evening and facilitated through Henry Tillman. Susanne Chishti is coming to talk to us, and I'm going to leave it to him to introduce her. But may I say that I think this is certainly a way in which both politics and human interaction is going to be affected in future. And I'm delighted that the Q&A is going to be chaired by Carol Cohen, who I'll introduce later on. But in the meantime, let me just say, Henry Tillman is one of our committee members and banker for over 30 years. And particularly, he's developed a relationship with the Asian investor and the Chinese, and become an expert in the work that he's able to support other people operating in that market. It's typical of people who've actually made great strides in the last few years, thanks to technology. And so he is an ideal person to introduce our speaker, Susanne Chishti, and I have great pleasure in handing over to Henry Tillman to do so.
Thank you very much, Lord Taylor. I'm going to be very brief in my remarks. The idea actually came from Carol Cohen when she asked in a prior committee meeting to say, wouldn't it be nice if we had a woman talking a bit about the city and the technology industry? So I immediately reached out to Susanne, who I work with operationally. So I know her in the business she runs and the team she manages and all of that. So I know her, how she runs her business and how she built the business. But one of the reasons I wanted to introduce her is because what Susanne is doing in those markets is very much aligned with what the government's doing in its markets. So Susanne also specializes in Africa, in Nigeria and in South Africa. She can talk about that a bit. And she also has India as part of her family. And it's a big focus. So as you know, the government, including our prime minister, is a big fan and supporter of those markets. So what she does for a living and what we want to do as an economy is very, very much aligned. So I'm going to go quiet now and pass it over now to say thank you, Susanne, for doing this, and over to you.
Thank you very much, Henry, for the nice introduction. And thank you, Lord Taylor, for inviting me, and Melissa and Carol as well for all the preparation. And it's a pleasure to be here tonight with all of you. And I believe, Melissa, would you be able to share the slide deck so we can all share with you the slides, for tonight? But my name, as you know, is Susanne Chishti. I'm the CEO of Fintech Circle. And today I will talk about how fintech innovation is changing our lives, and also give you a little bit of a guide to the fintech revolution, which you have heard about, but I want to explain it more, what it actually means in more detail. So if you go to the next page, this talks about myself a little bit more. So I am an ex-banker. I've been working for Morgan Stanley for 7 years in London and in Hong Kong, also for Lloyds Bank, for Deutsche Bank. And I left banking about 5 years ago to launch Fintech Circle, and also sit on various boards, on the board of Crown Agents Bank as non-executive director, and also on the board of fintech companies, both listed and unlisted fintech companies as board member. And so if you go to the next page, this gives you an overview of Fintech Circle in a little bit more detail. At the center of Fintech Circle is our investor network. So we as a group, we're a group of about 100 people, and we invest in fintech startups. We are all based in the UK. I'm based in London. Originally, I'm from Vienna, from Austria, and I moved to London more than 20 years ago already. But all of us, we are based in London mostly, and our goal is to identify the best fintech startups to invest our own money in. So this is the inner circle, our investor network. In addition to that, we then work with our second circle, the middle circle on this page, which is our partners. These are our experts, our expert community of the fintech world. So these are co-authors, co-editors of mine. We published 7 books already, and so these are the expert community around us. Also, our corporate network of bankers, of insurance companies, asset managers, and our partners such as law firms, marketing companies, headhunters, software development agencies. And all this network is necessary to help fintech companies grow and scale up. And the third circle you see on this page is our global reach. So although we are based in London, we've got global reach, as Henry said in his introduction, and we have got almost 200,000 people daily who read and talk about fintech and who watch what we are publishing online across LinkedIn, across Twitter, and Instagram. So we're using all social media platforms to share the latest trends about the future of finance with our global community. And today's presentation is really a distillation of the most important things for you in just half an hour, so that you get the updated version of what currently moves this very important sector. So if you move to the next page, this shows you a couple of companies we invested in already. So I mentioned, we started to invest about, 4 or 5 years ago, and we invested in about 20 fintech companies so far, and have already 3 exits. And those companies were purchased by established financial institutions. So Bean, at the bottom left, was acquired by comparethemarket.com, for example. Albert was acquired by Santander, and My Future Now at the bottom was acquired by Legal & General. So you see the fintech sector is booming. It's fintech startups being founded, being funded, and being scaled up. And then either they stay independent and become unicorns, or they're being acquired by large established institutions to help them innovate. So it's a very healthy cycle of growth. So if you move to the next slide, please. This page shows you about the books which we published, and fintech is a complicated topic, and that's why we decided to write 7 books so far. On the left side is the Fintech Book range, which covers both, the main themes of fintech, but also goes down into the verticals. So the insurance sector and the technology affecting the insurance sector is called InsurTech. So we've got a book on InsurTech, 1 book on payments, the PayTech book, another book on private banking, on wealth tech. It's about investing, how to invest today, having all this technology at your fingertips. So that's a wealth tech book. 1 book about AI, about artificial intelligence, machine learning. Like Lord Taylor said at the beginning, technology and AI is moving in, but it's very important to use it in an ethical way. So we talk about ethics, the ethics of AI, to make sure that it serves our people, it serves our democracy. And so that's very important about AI, how to use it properly. And the legal tech book is about access to justice. How can we give people who might not be able to afford lawyers access to legal advice? And how does the legal profession change as a result of technology? So that's all on the left side of this page. And on the right side is the latest book we published just end of last year. It's called the Fintech for Dummies book, and talks about the future, of fintech in more details. And again, on this page now you see what happened in the film. So we launched last year for the first time the first film about fintech. And this film was co-produced with ITN. And it's available on our website. So I kept the URL on this page so that you can watch it as well. It's 1 hour long, and it really gives you a great overview of what happens globally already in the fintech sector. And if we move to this orange page now, I think that's really what concerns us all, and what is a challenge, to our status as leading financial marketplace in London, is that 40% of all companies are at risk of being displaced because they are not equipped for the digital future. That's a big number. 40% of companies are at risk of not being ready for the digital future. And that's why fintech is so important, because it can help our financial institutions to compete long-term and to be at the forefront of financial innovation long-term. So if we look globally, fintech is booming. You can see here the sectors which are booming across fintech are across insurance, wealth tech, reg tech. Reg tech is another sector which is about compliance. How can we ensure that our banks, who pay so much in compliance costs to comply with our ever increasing regulation, can do this cheaper, and the technology can help them to be more compliant at less costs, for example. So these are the booming sectors within fintech. North America is leading the activities, but other regions are very much following. And in London, we are a global center of fintech innovation. So how did it start? That's the big question. When you look at this page, how did it start? In the year 2000, if you wanted, or if your children wanted to launch a fintech startup, they would have needed $5 million to do that. So it was out of reach for most people to join or to become an entrepreneur, because it was just too expensive. Today, to launch a fintech startup is less than $5,000. So the barriers to entry have been removed. So we see lots of fintech companies being founded because it's much cheaper to do so. On the other hand, in the middle of this page, you see the check size increasing. So the smart money is moving in. The smart money in terms of venture capitalists, private equity investors, everybody wants a stake in the fintech sector, and you see more and more money is being invested. So as a fintech founder, you've got the double win. You've got less barriers to entry to launch a fintech startup. It's cheaper to do so. And number two, more money to being invested in the fintech companies. And number three, on the right side of this page, you see what banks have been doing. So when we look at Hsbc, Santander, Barclays, BBVA, all of them have launched large fintech investment funds, where they dedicated 100 to 200 million pounds to invest in fintech companies as part of their corporate venture arms. And so as a fintech company, you really have got everything going for you. You've got barriers of entries removed, regulation is supporting fintech companies, and you have got institutional assets wanting to have a stake in the fintech sector, and institutional investors wanting to invest in fintech. So very bright macroeconomic and microeconomic environment. So on the next page now, I want to test your eyesight, number one. So if you look at this page, this shows you a very busy page of a website of a leading bank. And I want to check now if anybody of you can see the logo of this bank. You have to have very good eyesight. I don't know if anybody can see it. It is on the top left corner. It's the logo of Hsbc. So this is the website, former website of Hsbc. And what one company has done, they've overlaid Hsbc's website with fintech companies who provide different services which Hsbc already provides at the moment. And so when you put yourself into the former head of the Hsbc CEO, he might have thought, oh my God, what's coming? All these fintech startups want a piece of our cake. They are competing with what we have on offer. And if we take them all, they could replace a bank. That's what we call a death by 1,000 cuts. And it was seen as a big threat to unbundle services of traditional banks. However, I think if you're all honest, nobody of us would want 100 apps on your mobile phone. We want a few, but we don't want so many. So what banks have realized, in reality, it's not the fintech startups or not the fintech scale-ups which are their competitors, but it is the tech giants. So if you move to the next page now, you can see the tech giants. I added here the Western tech giants, from Facebook to Google to Apple. Those are Amazon. They are all moving in. Many of them already have got banking licenses. They provide banking services, financial services to their clients. I'll just give you one example, Amazon. Amazon, when I think back, I used it only to buy my books, in the past. Then you can buy anything now. But Amazon, of course, has got their own marketplace where small shops can sell their own goods on Amazon, and Amazon takes a big cut. And what Amazon has done now, on top of it, they now provide loans to those small business owners, because they know exactly how much they sell every day, and all this money flows on Amazon's platform. So Amazon is in the best possible position to provide working capital to those shop owners. And so Amazon has got the license to provide loans, and their loan book is more than 1 billion in size. So it's enormous. So what can we do? What can financial services do to survive and to compete? That's a $1 billion question. And it comes down to an attitude, actually. It comes down to openness. And so the question I always ask when I teach, I mentioned to Henry, I just had a Fintech masterclass with South Africa about 2 weeks ago. And I spoke to Lagos, to the investor network. They're building up an investor network in Nigeria last week. And often when I get asked, what can companies do to explore and to collaborate with this booming fintech sector, I talk about open APIs. And I want to explain you what this means now and why that's so important. So API stands for Application Programming Interfaces. And it's basically a word which means how you connect to other companies. And you can only connect to other companies when you realize it's of benefit, to both sides. And so let me tell you a story now about Facebook and MySpace. So if you look at the next page, when you think back to about 2007, some of you might have seen MySpace, some of you might have been on MySpace. And MySpace was the leading social platform globally. And it was the place, people wanted to be on. It was well known. And all of a sudden, in 2006, Facebook was founded by Mark Zuckerberg. And Mark Zuckerberg, in the first year, nothing really happened to Facebook. There was no growth whatsoever, very boring numbers, didn't grow the business at all. And MySpace was the big winner globally. They managed to grow, and they were seen as the #1 globally. But then what happened was that MySpace made a terrible mistake, and Facebook made one decision right. And this was that Facebook opened up to developers. So Mark Zuckerberg, he realized we don't have all the answers in-house. We need to reach out to our global community of tech companies around us who can develop on the Facebook platform. While MySpace's CEO, he made the terrible mistake to think that they would have all the talent, all the knowledge in-house, and they don't need to work with others. So they stayed closed, and they went out of business at the end. So this is a big attitude shift, I think, which is required. And that's why large banks now, when we look at this page, we see large banks realized, although large banks, and I worked for many large banks as myself, as you know, they are seen as big elephants. And this page actually has been shared by the CEO of one of the largest banks, whose color is orange. And you probably know him. It's the CEO of ING. And he said about his bank, he said, we are this elephant. We cannot move quickly. We move actually very slowly, because every decision takes weeks. Sometimes it takes months to make a decision. And we know all these fintech startups are behind us. They're racing. They're little small dogs racing after us, want to overtake us. But we need to be a running elephant. We need to be able to speed up. And we will do that because we've got the capital to help us. But what we realized as ING, and what all banks today realize, it's not about trying to do everything in-house yourself. It's about working with the best fintech companies to innovate faster for the benefit of your clients. And that's why this quote here from Mr. Michael Gardner, he's based in the Silicon Valley, the head of innovation at BNY Mellon. He said, it's almost like a warning to banks. He said, a bank with no API strategy will not be able to compete. We believe the initial costs of setting up API systems may be high, but the opportunity costs of not doing so are higher. So very important to have this attitude of collaboration, of working with fintech companies. That is key. So if we move to Bill Gates, he said something so important to all of us. And he said, never be lulled into inaction, never underestimate what comes. And he said, often what we do, we overestimate the short-term changes. So we overestimate what will happen in the next 2 years, but we underestimate the change that will occur in the next 10 years. So when I remember when I grew up, I didn't use a mobile phone, I didn't have an internet, and now we can't live without those things. So it's something, sometimes these things which happen over 10 years are the most revolutionary changes in our lifetime. We often underestimate the impact those changes will have. Moving to Forbes cover page. When you think back to 2007, I remember this cover page because I had a Nokia phone at the time, and the CEO of Nokia was on the cover, and the title was, he had 1 billion customers at that time, and it was, can anyone catch Nokia as a cell phone king? And maybe some of you think back to 2007 and who else was around and what else was founded in 2007. It was the Apple, the iPhone. The iPhone was founded. So he was being asked during this interview, do you expect Apple to be a threat to your business? And he said, no, I don't think so. The iPhone was very much young. It was not yet developed properly. So he thought Nokia has no worries at all. And that's, of course, something which we all have to be aware of. It's our blind spots. Often we cannot imagine that established companies will go out of business at some stage, although we can see in the rear window that the competition is coming. And so the question is, why is it so hard to change? And why is it so hard, especially for finance? And the reason is because we are an industry which is more than 500 years old. We have got lots of heritage, lots of traditions. And that's why it's hard to change. And therefore, what I wanted to do now for the next few minutes is to explain you exactly what fintech is. So really deep dive into fintech. So if you go to the next slide, this shows you what fintech is in detail. And the first thing to do is when you think about financial services is to think about what part of financial services you want to talk about. So is it retail banking? Is it corporate investment banking? Is it trading? Is it asset management, private banking? Is it transaction banking, payments, or insurance? So what layer? I call it the layer number 1. When you look at these metrics on the right side, you can put the layer number 1 across the horizontal line, the x-axis, and you can have all these very sector providers of financial services are here listed. The y-axis on this chart is layer number 2. This is the business model which is being used. And when we think about business models, it could be a business to consumer model. So for example, when we think about Starling Bank, Starling Bank is a challenger bank helping end consumers to open their bank accounts, a business to consumer model. But it also can be a business to business model. These are all those fintech companies who sell to banks, who help banks to be more innovative, to help banks to cut their compliance costs. So it could be business to business. Or we've got fintech companies who work for and sell to regulators, to the government. These are so-called B2G business models, business to government business models. And of course, new business models emerge, such as crowdfunding, peer-to-peer lending, platform-based business models. So when we analyze an investment opportunity, for example, we always want to know where does it fit in? Where in this metrics does the fintech company fit in, and who are the competitors who play in this space? And we have got now 2 axes. We've got the sector, we've got the business model, and now the 3rd axis makes this whole a cube, a 3-dimensional cube. And this 3rd layer is technology. So what technology do we apply to solve the challenges we want to solve? And these technologies could be big data analytics, it could be artificial intelligence, it could be blockchain technologies. So we've got, in the 3rd layer, we've got this opportunity to now overlay what type of technologies are available and which can be used in the best possible way. So that's what fintech is in a cube. You can imagine it's a fintech circle cube, we call it, which really defines the fintech opportunities. And the reason, of course, is why. Why are we talking about fintech today? Why is fintech so important? And there are clear benefits to fintech, which are on this page here. Number 1, they help increase your revenues. So when you are a bank and you want to work with fintech companies can help you increase your revenues in 2 ways. Number 1, they can help you service customers who have been unprofitable to you so far. And I think about, let's say, small businesses. Often when I think back to my banking days, often we ignored small businesses because they were just not profitable for us to be serviced because our costs were too high. With fintech, you've got the market of one. You can service them at lower costs, and that's why they become, again, a profitable client segment to you. You can improve the customer experience with fintech, again, increase revenues. But at the same time, you can focus on risk and compliance, ensure that you become compliant at less costs. So it helps protecting the business and to reduce costs in operations in back office. So an example I give you, one of the banks I'm on the board of, we are now installing fintech solutions for our operational back office to lower our costs and to automate things which have been done manually in the past. I wanted also to share a key topic in fintech, which will touch all of us. And this is the topic of financial inclusion. And financial inclusion is something really serious because we've got 2 billion people in the world who have got no bank accounts. And when you imagine, I guess we can't even imagine to live without a bank account. But I think one of the things which are most surprising is that it doesn't only impact emerging markets, it also impacts us here in the UK. Here in the UK, we have got more than 2 million of adults who have got no bank accounts. In the USA, we've got 35 million people who have got no bank accounts. And in addition to that, we have got a large portion of our population who have got bank accounts, but who are almost have got no buffers. Then also in the States, there are about 40% of Americans who have got less than $400 in a bank account, which basically means as soon as one thing breaks, as soon as the fridge breaks, the dishwasher breaks, or the car breaks, they have nothing anymore how they feed their children at home. So that's the society we're living in. So financial inclusion is not just an emerging market problem, but it's a problem which really touches all of us. And it's a kind of almost a requirement, for living a dignified life. And Lord Taylor, spoke at the beginning of this talk about also the farmers' communities. And I said, I will talk about how fintech can help farmers. And in this case, I have an example here for you about a South Asian fintech company. They're based in Singapore, and they realize that lots of farmers in Southeast Asia, they do have livestock, but they have not enough money to feed their animals. So what they have created is a fintech solution on the blockchain, which allows to so-called tokenize livestock. And this basically means to record the livestock they have, to send those photos to the insurance company on their mobile phone. So everything is on their phone, and to be able to get them insured. And as soon as the animals are insured, you can get a microloan, maybe $10, $20 to have enough to feed the animals, to be able to help them, survive. So we're talking about microloans, micro lending, micro insurance. All this is being enabled and empowered by fintech companies. This page here, Eversend. Eversend is a fintech solution for Africans. It's a neobank for Africans. And what it does, it allows African people to connect by allowing them to easily pay each other via a multi-currency e-wallet. So they can convert, everybody can use it. So we all can become clients of Eversend, and we can use it to convert currencies, to send money maybe back home to your families. If you left your country, you want to send remittance, to access a virtual debit card, and to pay your bills online and on your mobile phones. Innovation here. And so I think when we go to the next page, I wanted to leave you with one key sentence as well, which Charles Darwin said. To fintech and to the innovation. And Charles Darwin, when he talked about species, and many of you might have been at the Galapagos Islands, which was he said it's not the strongest of the species, nor the most intelligent that survives. That's a critically important lesson for us all. When we look at these logos, because they were not quick enough to change to the new world which we are living in. So very important to keep this in mind. And so on the next page, you see these innovation models. And I wanted to also share with you what a very famous professor at Harvard Business School said. He said that sustaining innovation is controlled by incumbents, but disruptive innovation is owned by new companies. And that's why this collaboration between established large financial institutions and small fintech companies is so critical, because the large tech giants are coming in, if we want it or not. They are moving into our sector. So we have to be able to refresh, to compete, and to innovate. And the best way for established companies is it by collaborating, by investing, by co-producing new innovation with the fintech sector. And so if you move to the fintech power shift, this is a page where I wanted to quote Mahatma Gandhi. Mahatma Gandhi, he said something in a different context, but it fits so well to fintech CEOs. And he said, first they ignore you, then they laugh at you, then they fight you, and then you win. And I think that's often, fintech CEOs, they feel, I don't know if the fintech company we find will ever make it, will it ever be successful? But overall, the impression I get when I look at all the fintech companies I see, long-term finance will become fintech. The long-term future finance is the fintech sector. And that's why I think Mahatma Gandhi was so right. And I think that's why we're talking about fintech tonight, because it's such an important topic. So on the last page, you've got my contact details, which I'm happy to share with you if you want to get in touch. You've got here my email address, and you, of course, can connect on LinkedIn, on Twitter, on Instagram, and also just by email if you would like to get in touch to talk more about any questions you've got. But we also have got now time for a Q&A session, and so I would love to hand over to Carol as to moderate it.
Thank you very much indeed, Susanne. That is really interesting. What is so interesting about the whole subject is that as you were speaking, I kept on thinking of other things, other aspects of where the model of fintech actually applies elsewhere. My grandson is 12 years old, and he's into Rubik's Cube. Now, he's not, his father was in turn interested and fascinated by Rubik's Cube. And I can see the modeling that you have been talking about is very much the same sort of geometry, the three-dimensional thinking that lies at the bottom of so much of what you've been talking to us about. Yes. But I'm not going to do the Q&A. Henry was absolutely right. It was actually Carol Cohen who recommended that we had a woman who was very much involved with fintech, and that somebody that turns out to be you would be ideal to present to us this evening. So it's totally appropriate that a second committee member takes the chair for the Q&A. And Carol, I'm delighted to hand over to you to take the Q&A for what has been a really interesting talk.
Thank you very much, Lord Taylor.
Yeah, thank you, Lord Taylor. And thank you especially, Susanne. I mean, it just, when I first looked at the information we originally had, I thought it was so totally bewildering. And yet you've cleared many things up. And obviously we can't take it all in straight away, but it really was very good, very well put. And thank you very much indeed. I have quite a few questions. I don't know, Lord Taylor, was there any specific question you wanted to ask now?
No. Please carry on with the...
Okay. Then Billy James, is he here? I couldn't see him earlier. No?
Yeah, he is, yeah.
I'll ask the question then on his behalf.
I think I'm now unmuted. Sorry about that.
Oh, sorry.
My question was, I was heavily involved in the development of the long-term swap market, which grew exponentially. But we kept the regulator at bay by always dealing with professionals. How does the fintech market keep the world's various regulators at bay?
Yes, a very good question. And I think what we have been seeing is that the regulator plays a critically important role in the fintech sector. And also what happened was 5 years ago, I remember when I joined, or 6 years ago, when I joined the fintech sector, the FCA started to work with fintech companies. And the FCA saw their role, as you said, as guiding the fintech sector to do the right things, to be compliant and to provide guidance in order to help the fintech sector to play to the same rules as the established companies, because often fintech founders don't come from a compliance background, and they come from the technology side, so they need to get this guidance, this support. Then the FCA, of course, has built up a sandbox for fintech companies to test their value propositions, their offerings in a secure, safe environment. And when you graduate from the sandbox, you've got almost the stamp of approval that you understand your business model, you can launch, and you've been tested and validated by the regulator that this new business model actually is working, it's fair to our consumers, and it helps, and does what it's supposed to do. And I think what we have seen overall, and I think coming to the overarching meaning also of your question, William, is to know that we have seen so many retail investors moving in addition to institutional investors. And what we have seen now, in the United States, for example, the volume of retail investors together is the same as the volume of all mutual funds and of all hedge funds. So it's unbelievable. We've never seen this in the past. In the past, retail investors played a small role, and they were often not that important. But now we've seen this big growth where retail investors, institutional investors coexist, and therefore the regulators have to regulate, a much more complex environment. And for fintech companies, it is very important to work closely with the regulator and the FCA, and the regulator reaches out their hands. I remember I was invited actually by the FCA to a private roundtable discussion a few years ago, where the FCA invited investors and fintech founders, and they asked us about how we would want regulation to evolve. Because often the challenge of regulators is also that the sector moves so quickly ahead, and often it's very technology driven. So when we think about, blockchain technologies, even cryptocurrencies, can be very dangerous topics, can be very confusing topics. So it's very hard for somebody who is basically focused on regulating the whole day, how to understand these new concepts. And so that's why this working together, the communication is so important, and really is done very well, I must say, here in the UK, by our UK regulators. Other regulators are catching up. When I speak to other countries worldwide, many other countries, they look up to the FCA how to regulate the fintech sector, and they want to learn from us because they've seen, that how well we've done it here in the UK, and they want to learn lessons and best practices, from us.
Thank you very much. It was a fascinating talk.
Thank you so much. Thank you.
Thank you. Thank you both. I can't see any hands up at the moment, but I do know that Henry has a question.
Right. I want to have some to link together things that you've done, and also what I just heard from Lord Taylor with the younger people, because as you will know, Susanne, the largest retailer in Europe is called Klarna. It's $45 billion. It's larger than our banks. Yes? And
Yes.
There is no credit function. So as someone like myself who spent 30 years in a bank making sure large corporate credits don't go bad with large teams of people, there is no one at Klarna that has any credit experience, and there's no interest rate on any loans. So it's all driven off kids' machine, off their use of those machines you were talking about. So maybe you can explain that level 3 and how that's all used. They look at what your usage is on your machine to know who you are as a person. And so there's no credit function. To me, it's extraordinary. So the entire credit function of the bank is disappearing.
Yes.
It's quite extraordinary.
It's a good, you have mentioned a very good example, Henry. So Klarna is a Swedish company which has become, one of the biggest fintech unicorns globally now. And they just raised, I believe, several $1 billion in funding. So they are hugely successful in terms of fundraising. But as you said, they are being disputed in terms of ethics, because what they do is they allow people to buy products without paying for them. And it's this model which is called buy now, pay later. And this model, of course, leads to some people to buy things they can't afford, then they get into debt. And so this is, the ethical side, which many people disagree with. And the way the business model works, as you said, Henry, it is they do not charge the end consumer an interest rate. In the past, a consumer who wanted to have a loan to buy a product would have to pay an interest rate, obviously, to a bank to get a personal loan. But what happens now with Klarna is that they take the interest rate from the company who sell the products. So it's almost like if you wanted to sell a expensive sofa, the warehouse sofa manufacturer provides the sofas at a discount, and this discount gets paid to Klarna as basically the revenues Klarna earns. And so it is a model which actually allows credit scores people in minutes, in seconds often, and allows people to buy things which they can't, sometimes they don't want to pay up front, but sometimes they can't pay up front. So it's kind of being criticized in public. I personally am not a fan of this model either, because I think it's better to save first before you spend. But unfortunately, some companies, use this model now, and they are very successful with it, because unfortunately our society is using debt, and is using debt too much. And so this is a new business model, and they are, when you think about successful fintech companies, they are seen as one of the big global unicorns now, and lots of UK investors have invested in Klarna, and hope for a very successful exit at some stage. I personally am not invested in Klarna, so I have no alliances with them, but I think their business model can be criticized, because of the ethical component.
I agree with your position. I was only making the point that this is what Alibaba started with in China. And I just wanted to show the people that when you have an 18-year-old child or a 21-year-old daughter, every website they go to tells you how they live their lives. It says it's a footprint of who you are. So if you read this website or this website or this website, or go to this theater production, that you make a credit decision based upon how you use your phone. Yes, it's made decisions not from a credit point of view, which is your point of view, but they can make a decision of how the human being lives based upon the use of that phone.
Yes.
And that's how these decisions are made. So, and it has worked. Alibaba's 250 billion market cap, so it has worked, and there are issues with it. But I want to just make the point for the committee that their children and grandchildren, when they use those pads, there are people looking at how the use on those phones ultimately, right? Because ultimately, what they choose, what they look at, becomes a credit force and not a credit committee. It's quite extraordinary because it goes to big data, which is what you were talking about with level 3. So I don't want to hijack this, but I just want people to see how this really works.
Yes.
Yes.
I'll give maybe one other example, Henry, in terms of South Africa. When I was in South Africa a few years ago to conduct fintech masterclasses for bankers in South Africa, in Johannesburg, I was introduced to a fintech company. They provide microloans to farmers. And these farmers, they buy literally fruits and vegetables in the morning, they sell it during the day, and then they go home, to their homes, and then they pay back these microloans. So it's 1 day, you get a 1-day loan to buy your goods and sell it and pay it back within 1 day. And these are all people who are unbanked. And so I said, so if somebody's unbanked, how do you credit score them? Some of them have no address, they have no bank account, you've got no past transaction history. So how do you do that? And the way they do that is they use the mobile phone data. And what they check for is they check how is the mobile phone being paid and where is it being charged. So because if you know that the mobile phone is being charged at the same place every day, you can assume that the people have got a home, at least where they can have got electricity. If people have to go outside to kiosks to charge their mobile phone, they have no electricity at home, they have no home. And then, so those are completely a different world to us, but that's how credit scoring takes place for unbanked, using the mobile phone behavior to allow to see, are they worth, can we give them a microloan, to run the business.
And this is what's happening in those countries, right? In those smaller countries. It's Charles Kelly raised the point. That's what's happening. It's the phone companies that are driving the use of this stuff.
Yes.
Sorry, Carol, back to you. Sorry.
No, it's all right. I'm just thinking about the worries that most people have, as of course the security. I mean, is everything encrypted? And when you've just been talking about,
Sorry, I
kind of
don't mean to be,
terrifying,
I'm just trying to help educate, that's all.
yes, they know just everything about us. Melissa, have we got time for one more question?
Yes, we've got quickly Brian Weller and Charles Kelly. Perhaps they could both give their questions together and perhaps Susanne could answer them.
Thank you very much. I was just wondering, with so many people who have not got ID or bank accounts, like you say, can fintech actually help with getting welfare to work?
Yes, a very good question.
Processing the welfare directly to them.
Question.
Yes. Yes, a very good question. And that's what we want to achieve with our financial inclusion goals in fintech. And I give you a great example in India. So in India, and we said, my children are half Indian, so we speak lots of languages at home. And when we ever go to India to visit India, we always, surrounded by lots of people who are living in poverty, unfortunately, and who have got no bank accounts, who often can't read or write. And so what the Indian government did, they used technology and scanning devices to give people an identity. And we call this a digital identity, Brian. So, where people use a thumb because they can't sign, they can't sign the name, but it's with using a thumb, using biometrics. So your eyes, your iris gets scanned, your facial recognition gets scanned. So you can now prove who you are with your biometrics, which has been rolled out to hundreds of millions of people in India by the Indian government. And with this digital identity, you have got access to services. You've got access to service to the government, governmental services, financial services. So it opens your way into the society so you can participate in the society as an active participant. And you're not anymore excluded. So great question.
Thank you. That was excellent. That would be wonderful.
And Charles,
Yeah, it was just a quick point really about how fintech has a great presentation, by the way, how it's changed consumer services like remitting money abroad. In my previous business a few years ago, we had a lot of clients that remitted money abroad, and the banks used to charge a fortune for this, and it would take maybe 2 weeks to get the money in the person's hand. And then these companies came along and were able to send money within minutes, but the banks resisted it. They tried to stop their banking facilities, the companies that ran these remittance companies, and said, oh, it's against regulations and it's money laundering and all this sort of stuff. But fortunately that survived. And it's similar with crowdfunding. They've tried to clamp down on these platforms. I know a few of them have gone wrong, but in the property market, for instance, hundreds of millions have been raised through these platforms to finance deals that would have otherwise been difficult with the banks. I think some of the lending decisions on these crowdfunding platforms has something to be desired. That's why I think some of them have collapsed, because they're not underwriting the cases properly. But it is remarkable how the fintechs have changed things. And as you mentioned in Africa, and how people can send money around through their phones. I think the banks have been a bit slow to react to it, but they are reacting to it now. And, they're catching up with things now.
Yes, no, I agree, Charles. I can see that, because remittance payments, we always said, it's so expensive to be poor, because the poorest people were having to pay the highest fees sending their money home, which was completely unacceptable. And now they can use, the mobile phone, they can pay a much smaller commission, and it's much fairer, much easier, and cuts out the middlemen. Often there were so many middlemen in between, all got a cut, and they often the poor population didn't understand how to access those applications, and now it's possible with fintech. So I agree, remittance payments is a huge benefit to our society. and crowdfunding and peer-to-peer lending, you know, those again are new business models which allow companies to access to capital which they might have otherwise not been able to launch and to grow their businesses. So it's all, I think we're living in very exciting times where so much is changing. And I'm a mother of 2 teenagers, and I always say in our society as a parent, you know, I believe there's an algo line. You know, there's an algo line, which basically means either you're above it or you're below it. And we want, you know, our children, we want ourselves to be above the algo line, because at the end of the day, we want to use AI, machine learning to our own benefits, but we don't want to be controlled by it. And there are people, unfortunately, below the algo line. When you think about the Uber drivers, you know, the free now, Uber, Bolt, you know, lots of people who drive these cars, their boss is an algo. It's the computer app which tells them where to go, whom to pick up. If they lose their job, they're just getting deactivated from their account. You know, so that's how it works, unfortunately. So that's why I think it's important to understand how our society is being impacted, and to rule from a governmental point of view, you know, from a society point of view, to ensure that technology is used to our benefits and to the benefit of us all. I think that's important for us to be aware of technology, so we all us and our children are, you know, and our society is above the algo line as much as possible.
Thank you very much, Susanne. That is fantastic and great to end on a really positive, hopeful note as it spreads across the world.
Good luck, Carol. Thank you so much for the great questions as well to all of you.
It's a pleasure. And Lord Taylor now.
Well, Carol, thank you very much for chairing it. Susanne, I think this has been one of the most interesting evenings I've had for a very long time, simply because you provoked in me an awful lot of thought about subjects which you've not necessarily been talking about, which you've alluded to, and I can see analogies with things that happen through my iPhone, my analytics, Cortana, my analytics telling me who I've been speaking to and whether I've been speaking to the same people or to lots of different people. Cortana telling me what's in my diary and what I've got to do today. I mean, these are really almost mind-bogglingly control elements which lie in the hands of other people outside your own free will. And I've been particularly minded of that because of the development of IT in the political world. I've been voting on PeerHub, which is a device, a parliamentary device, designed to empower peers by giving them an opportunity of voting remotely, speaking remotely, and being informed remotely. But of course, we've become slaves to our IT. We need our phone. Without our phone, we are lost because we're worse off than the poor African farmer who's at least got his phone.
Yes.
And that is a realization, I think, of that there are political elements to the move, the developments that you are talking of, and individual freedom and how it impacts on individual freedom. And I think it's really going to be important for politicians to be very much in tune with these developments to ensure that free societies, free thinking, and freedom to act are still preserved. But I think it's been so interesting to hear from you, and I've enjoyed it very much. And I thank you very much for coming. And I think we should declare the meeting closed. But
thank you very much.
Less closed minds than we had.
Thank you so much.
Thank you, sir.
Yeah.
So, is that all right, Melissa?
Yes, very, very good.